I'm Charles Payne. This is Making Money, and breaking right now, stocks are sharply lower today, hitting the pause on a 2-month-long rally. I'm going to give you my take on what the markets, why they're down today, and it's probably something that you have not heard just yet. Meanwhile, NASCAR making a huge announcement banning the Confederate flag from its races. This, as President Trump is set to put his plan to address racism in this country. He's going to put it out there, and we're going to hear from his attorney, Jenna Ellis. She's coming right up. And Amazon putting the pause on cops using their facial recognition technology. Once again, Silcon Valley deflecting from its own inadequacies. Is anyone else sick of their woke hypocrisy? All that and so much more on Making Money. All right, folks, now here's what I think are your three main reasons for today's steep sell-off. First, stocks out too expensive. Short term, bottom line. I mean, last week we saw the headlines that the stock market had just put in its best 50-day rally in history. And guess what? It only got stronger. It went parabolic. So there's a good chance that we probably have seen the best 60 days ever. And that means that a pullback was way overdue. Second, the Federal Reserve failed to lay out concrete ideas about how they would provide extra help to prolong the recovery in this economy. Wall Street wanted more about bending that yield curve. And third, investors are waiting to see just how much cash begins to circulate in this economy. I want to bring in two of my favorites to get their thoughts on this. Walser Wealth Management President Rebecca Walser, along with Keith Fitzgerald from the Keith Fitzgerald principal of his group. First of all, let me just get to you, Keith, just the market. And before you start, from March 23rd to the peak this week, the S&P was up 45%, Dow up 47%, and NASDAQ up 46%. So I like to remind people, occasionally markets go down.
That's the thing. They stink. They're uncomfortable. It's scary, but they're absolutely normal. The markets reward discipline over time, not at moments in time, which is what we have today.
Rebecca, your thoughts?
Yeah, I totally agree, Charles. I mean, I think the Federal Reserve was aggressive and acted very strong at first, and investors kind of maybe got a little bit of an irrational exuberance when we started reopening, saying, oh my gosh, everything's going to be fine, and we overbought really fast, and we just got a little too high, a little pricey, and there's a little bit of a pullback now for various factors, I think.
Rebecca, you mentioned the Federal Reserve. Yeah, I listened to a lot of commentators this morning. I didn't agree with any of them. I thought that Jay Powell didn't give Wall Street what it wanted yesterday, and that was more clarity with respect to either negative rates, capping yield curves. I think Wall Street, they wanted more. I mean, listen, let's face it, they like that Fed medicine, and you pointed out, Jay Powell was extremely decisive. He did not wait. Now it feels like he kind of spiked the ball yesterday and is willing to wait despite their own dire economic forecast.
Right, Charles, but we can't have the Fed, spending $2 trillion in a couple of months every time we have a problem. So I think that he needed to set expectations a little bit and not allow people to think that the Fed was going to just totally be there at any sign of a second wave or anything. So I actually am glad that I agree with you. I think he gave them what we should have gotten, and the market overreacting a little bit this morning, I think, is just because of the fact that they're not going to have a sugar high from the Fed anytime soon. So they're starting to, have a stomach ache.
So, Keith, if the Fed's not going to keep feeding us that sugar, where do we get the next catalyst? How much danger is this monster rally in?
Well, I tell you what, frankly, I don't think it's in a lot of danger because the computers are driving. It's all about psychology. As soon as the narrative shifts back to the upside, this thing is gone like a rocket again. And, again, as an investor, that is actually part of the process. That's something I'm looking forward to. So what people really don't like about days like this, Charles, is that they don't know what to do or how to handle it. They're caught unprepared. If you are a savvy investor, invested in the best companies, then you can take days like this in stride.
Rebecca, to that point, I think also not just people, but the financial media. I know the narrative all day was that the COVID cases were spiking. I put together a lot of work. I didn't get a chance to triple check it, so I didn't use it, the boards that we had together. But off the cuff, the last 6 days that we saw a spike greater than yesterday's spike, every one of those days, the next day, the market was up. So I think that's a disingenuous, 20 states see COVID-19 up. Well, that means 30 see it down. But we are always grappling for a reason when sometimes it's just what it is, no?
Yeah, Charles, exactly. You're 100% right. And I just want to urge caution here before we start panicking about a second wave. We're also doing a lot more testing. So I don't see that there's any frame of reference. When we talk about these spikes, where's the frame of reference? But we're doing 50% more testing or 25% more testing. We expect more test results to show positives when you're testing more people and you have a virus that is spread across the globe. So let's get some point of reference. Let's calm down, take a breath, and everyone I do not see, I'll go on record, Charles, I do not see a fall wave that is a panic that will happen. I don't see it, and the markets aren't going to see it either.
Keith, you're talking about owning good stocks. These days, how do people know? Listen, because good stocks can be overbought, right? And bad stocks can be oversold. And, we saw a lot of companies that saw 100% rebounds. And yet, whether they're cruise lines or airlines, some people thought maybe it was just too much too soon.
Well, a lot of people think Las Vegas is too much too soon, and I don't mean the reopening. I mean the gambling in general. So to me, this is a very simple process, and you don't change your behavior simply because the market turns on you. If you have quality companies with a clear path to profit, the management savvy, and the mentality needed to implement it, then you know what? Those are the kind of companies you want to prioritize. And on days like today, when they get put down on sale, that's when you make your move. Because in 5 years, you're going to be kicking yourself into the you know what if you don't own them.
Yeah, you might be kicking yourself in 5 days. Rebecca, are you looking at, not necessarily buying right now, but are you refining your buy list right now?
Yeah, I think it's a great time. I totally agree. It's a great time to say, hey, I missed out on the last dip of this stock. For example, say Apple. It was 253, now it's 3, whatever. I missed out on that opportunity. Let me jump back in if it gets back discounted. These are discounted prices, and I totally agree. Let's buy back in when the market's low. So enjoy this. Enjoy it.
Investors always say that to themselves, too. If I ever get a chance, and then on a day like today, I'm too scared. Don't be afraid, folks. You got Rebecca and Keith guiding you. Both of you, fantastic. Thank you both. See you again real soon.